Okay, welcome back. Let's have the SGX Nifty quickly on the screen and see what that is indicating. Still a 100-point down take, a 0.5%, 17,969 or so is where we will start. Siddhartha Khemka is now joining us. He's head of retail research at Motilal Oswal Financial Services with a sense on things. Siddhartha, good to have you with us here. Thank you very much. Just give us some feedback, first of all, on what retail sentiment is like, Siddhartha. Because yesterday was a good day for broader markets, mid caps, etc. But otherwise, the broader market has not been doing very well. And anecdotally, feedback is that portfolios are lower than what the benchmark index levels show. So just some feedback overall, briefly. Go on. Morning.
Yeah, good morning, Prashant. So yeah, you have rightly put it. I think the actual retail client portfolio level, they're still struggling while the index is masking the entire environment by putting up a brave front. And if you look at, we are still at 18,000 levels. If you look at the earnings, I think sequentially quarter on quarter, the earnings growth has moderated. The biggest challenge has been both in terms of the demand growth as well as a bigger issue of the commodity cost inflation, which has impacted margins. And that is what has impacted the broader market a lot. So you will have pockets, specific pockets where the earnings have been pretty good and the market has clearly rewarded those pockets. But by far, if you look at on an aggregate basis, that has not been the case. And especially if some of the retail favorite sectors, the consumption space, that has taken a big hit in terms of demand as well as in terms of the commodity cost impacting margins. Now we are hearing commentary that things are improving. We are seeing the cost inflation coming off, but that is something that will follow up. Overall, if you look at the retail sentiments, I think they're still on the silence. A lot of stocks, portfolios, they are not reflecting what the index is reflecting. So they are on the silence, waiting for things to improve. There is some portfolio churn, sector rotation that we are seeing. Incrementally, people are looking at some of the sectors like the capex theme, the budget presented. Defense is another theme which is picking up fast. People are looking at some of the defense names, infra, cap goods. These are names that is now picking up.
All right, Siddharth, hi, good morning. I wanted to your thoughts on the auto sector because, this year so far, the biggest gainers have been the auto stocks. Tata Motors is up 15%, M&M is up 11%, Bajaj is up 9%. And it's been a good comeback after a long time in terms of earnings, good earnings, some upgrades as well. Any thoughts on what the follow-on buying could look like? Any stocks that you'd recommend?
Yeah, Sonia, good morning. I think if you look at the corporate earnings which just got concluded, two sectors clearly came out in the front. One was the banking and financials and the other was auto. The sector was reeling under a lot of macro level challenges, the supply chain issues, demand was weak, commodity cost inflation, but Q3 clearly helped them in both in terms of improvement in demand, some price hikes were taken, new models have been introduced, and that has helped the segment. I think the volume growth was seen across sector in the auto space, except for the two-wheelers. We are seeing the improvement in supply of semiconductor chip. There is a strong order book for the CV business, for the LCVs. And if you look at the passenger vehicle segment, a lot of new models have come out and we are seeing strong growth. So within that, I think our preferred pick is more towards the CV space where the penetration of EVs is being witnessed pretty fast. Two-wheelers is another space, but unfortunately, the listed entities are facing a lot of competition and challenge. So Ashok Leyland is our preferred pick from the auto space. We like the company. There is an improvement in numbers driven by the improving outlook for the industrials capex theme that is helping them. They are launching a lot of products in the EV segment that is looking good. So overall, Ashok Leyland, I think they led by recovery in the macro environment, pickup in construction, infra-led activities, mining, as well as growth in the replacement demand. As I said, Ashok Leyland is the best play on the CV cycle revival and is entirely focused on the domestic markets. where we expect a 61% PAT CAGR over the next 2 years on back of a low base, improving margins.
Okay. Hi, Siddharth. Morning. What do you make of Nestle's analyst call? You know, the numbers came yesterday, then they had that investor call. There are divergent views out there. Your take?
Yeah, Nigel, good morning. So I think the results were pretty much in line with our expectations, a decent set of numbers, given the backdrop that most of the consumer companies have been reeling under demand pressure and cost pressures. From the con call, I think clearly the company is set towards expanding the reach in the rural space that they have continuing, and that is helping them. Some of the new product launches has been planned, and the company has come out with almost 5,000 crores of capex plans over the next few years. That should be helpful. But if you look at current valuations and the growth, I think the current valuations at almost 56 times CY24 P is expensive and doesn't offer much upside from at least 1 year perspective. So we are currently having a neutral stance on Nestle.
Okay, neutral stance on Nestle, got that. There are very mixed reviews on Nestle in terms of brokerages, right? JP Morgan has an aggressive target price of 21,000 on the stock, while a couple of others are on the lower side. So we'll talk about that in greater detail, get you a piece on what brokerages are saying. But in the meantime, Siddharth, just stay on. We'll come back to you in a bit. PS from the auto names that we discussed is technology. In fact, Tech Mahindra is up almost 12% for the week. Has the time come now to put more money to work, not just in the larger guys, but even, you know, some of these smaller players, KPIT Tech, there's Persistent Systems, which is at a fresh high?
Yeah, Sonia. So I think the market is looking for value, and some of the names, especially if you look at IT, has been underperforming for quite a long time. But if you look at in terms of earnings, I think after almost 6 consecutive quarters of underperformance, the tier 1 IT companies have finally shown a growth which is higher of the tier 2 players, and they have outpaced. So that is something that is heartening. The results have shown that the resilience from the IT space and things could improve from here on. So we continue to remain constructive on the technology space, although on a longer term perspective, in the near term, the next 1 or 2 quarters, the results could remain a little bit more subdued, and that could come in between the stock price performance. So our preference within the IT space is mostly towards the large cap names. So we like Infosys, TCS within the large cap names. Yes, I think Tech Mahindra, HCL Tech, they are also doing better. Some of the smaller names, we are seeing a lot of interest in the market. Again, as I said, because of the sector rotation that is happening, and I think they would also continue to do good. But as I said, our preference within the tech space would be largely focused towards the large caps.
Okay, preference in large caps in the IT space. Siddharth, you know, some of these air-conditioned companies, whether it was Voltas, Blue Star, Whirlpool, Havells, you know, a lot of them, they disappointed in the past quarter. But in the last couple of weeks or so, you've seen a bit of a rebound in these stocks. Maybe ahead of that, you know, much awaited, or not awaited actually, it's going to be a scorching hot summer maybe. So some pre-buying will take place. Your view on these stocks?
So Nigel, I think much awaited for these companies, yes, but for us it could be a scorching summer. Some of these companies have got impacted again with the same issues. One is on the demand side, and two on the cost input side, both of which are kind of improving. And to match it with which we are getting the summer season, seasonality factor works very much strongly with the names like Voltas, Whirlpool, Havells, with AC, fridges, sales picking up. And I think after the underperformance, the valuations is also now comfortable. If you look at Voltas, the major disappointment came from the EMP business, while the core, the room AC segment, they continue to gain market share and show the leadership. So I think, yes, that's a segment where the market could focus on. Things could improve from here on, especially given if the summer is much hotter than expected and the sales for some of these companies pick up. We would like to play something like an Voltas, both in terms of if you look at the price point, which gives a good risk reward, as well as the momentum that we could see in some of these consumer durable names.
I don't even want to think about what summer is going to be like. If February is like this, where the heat is unbearable.
10 days back, we were all talking about
The cold.
chilly mornings and, what.
It's called climate change. It's real. Whether people want to believe it or not, it is real. All right, Siddharth, thanks a lot. We'll just come back in a bit, take a quick break. We have some technical suggestions lined up from our guests as well. Before we slip into a break, let's tell you what's lined up in the next half hour of the show. Anuj will be with